Hi everybody, JJ here. You're watching Bull to the Bust. It is Thursday, May 14th. Welcome and thank you for joining me. So nice green day on the stock market. If you're in the stock market, you saw above 1% gains in all the major indexes. A decent day for gold. We're at 1732 now in gold. Oil still climbing back up as we told you it would, up to over $27 a barrel now. Bitcoin approaching 10,000, up almost 4% today. And it looks to be a flight to safety in both gold and Bitcoin in this case. Now, not everyone thinks those are safe havens, but obviously if the price is going up, many people are putting money into those. The news today that we're going to feature is going to be Wall Street bonuses are slashed. We're going to tell you about how much the trading floor representatives are going to be getting their bonuses cut by. Low-income Americans were hardest hit by the job losses. It's sad but true. We're going to talk about that. Grocery prices rise the highest in 50 years. Nearly 50 years. People that are saying no inflation is out there are definitely wrong. We're going to talk about that. Also, pension funds are in trouble. It's the biggest drop since the financial crisis. And this also is tied in with the stock market. We're going to talk about that as well. Let's go ahead and start right here. This is an article out of Reuters talking about bonuses for Wall Street. It's going to be dropping as much as 30%. Now, a lot of people were anticipating that there would not be any cuts to Wall Street or to the banks because of the bailouts. Well, keep in mind, a lot of the cash that was injected into the system was just to keep the banks operational, and that includes Wall Street and trading firms. Remember, a lot of these banks and trading firms alike are ultra leveraged, and there's so much risk out there, and there's so much leverage in derivatives and other trading instruments. It's so enormous that it's actually impossible to get how bad it really is. No one actually knows, because you see leverage on top of leverage on top of leverage. So for example, interbank lending, a bank may borrow money from another bank, and it's leveraged, meaning they're borrowing more money than it actually exists, and then they're loaning that money out on leverage. So it's multiple leverage, it's multiple times compounding. In a lot of these, for example, the repo injections that started back in September of 2019, that wasn't so much to enrich the banks, and I'm sure there is some misallocation happening with that, but it was to keep the system functional, because the system is so dysfunctional that now the Fed has to come in just to keep things operating in a normal fashion. And it's actually far from normal when you look at the underlying system with the fractional reserve system, the leverage lending. But just to keep this financial system operational, this had to be done. But Wall Street traders in this case are not going to be so lucky, and hedge funds and banks alike are seeing slashed revenue, and they're seeing a lot more people late on their payments, and that's less cash coming in. Remember, almost 1 in 3 people didn't pay their rent in April, so this is putting the banks in a bigger cash crunch. And of course, you had the Fed coming in and deregulating the banks, allowing the banks to not have any reserves in order to continue lending. So they have to keep this propped up. They have to make extra concessions to the banks, not just the repo injections, but also the dropping of the regulations. And I'm surprised there's a lot of people out there that think that this is just going to continue to go on forever. The Fed's just going to keep on going into endless debt, sending out stimulus checks, propping up the banking system. There is going to be an end game. Now, luckily for all of us, really, we have time to prepare. Now, think about where we're at right now. We're about 6 months out. There's a big event happening this November, and we know a lot of this is being propped up to just avoid absolute catastrophic depression type of disaster, mass starvation, massive deflation, where you see the stock market crash. Of course, they're keeping that propped up. That's part of the illusion. Remember, and we're going to talk about pensions here in a minute, pensions are invested in stocks. They have to get that annual return with rising stocks. But now we're starting to see a lot of pensions in trouble. You see, this whole system is intra-connected. The stock market going down doesn't just affect the people that are holding the actual stocks. It's much bigger than that. So of course they're going to try to keep that pumped up, and we've seen that. We just looked at the green today. The stock index is up, and actually we're up 50% from the lows that we saw in about mid-March. And again, without the Fed, none of this would be operational right now. It would have completely fallen apart. Now, an excerpt out of this article right here: for Wall Street professionals, most of whom are working from home, bonuses make up a significant percentage of their annual pay, and many need to prepare for big cuts. Workers in the commercial and retail divisions of many large banks could see the largest year-over-year declines in their incentive pay, up to 30%, as those banks have had to set aside billions for loans that could potentially go bad in this economy. Now, a few people are asking about this. Yes, the reserve requirements were cut. That means these banks can still continue to lend. Even though their reserves are running really low, they still have to put aside money for losses. But the entire system is in such chaos right now. Many people are saying that they don't even have to do that because the Fed's just going to come and rescue them no matter what. Well, obviously the banks are not so sure about that because they are setting aside these funds and they're having to slash these bonuses. Okay, this report also outlines that some of the biggest pay cuts could be from asset managers, who are going to receive between a 20 and 25% reduction in their bonuses, while hedge fund workers could see a 10 to 20% reduction in their bonuses. So it's about time that somebody besides the middle class working citizen, feels the impact of this shutdown, in my opinion. But it is the low income American that are the hardest hit by these job losses. Let's take a look at an article here out of CNBC. Now, we know the unemployment numbers are much worse than what's being reported. We know it's actually about 50 million people over the past 2 months that have lost their jobs. But the official number, which doesn't count a lot of people that have been out of the labor force, and it doesn't count people that have not yet been able to file for unemployment, that number stands just under 15%. But when you look at the lower income Americans, it's 40% of low income Americans that lost their jobs during the shutdown. But if you look at households with incomes of $100,000 or more, just 13% of those households reported an employment disruption. So we're seeing the rich less affected, and this is another classic example of the rich get richer and the poor get more and more broke when these events happen, when these economic disruptions happen. When you see small businesses shut down, that's typically going to affect the middle class. And not just the employees of the small businesses, but the small business owners themselves a lot of time are still low income. A lot of them are barely scraping by. You probably heard the statistic that I believe 8 out of 10 businesses fail. Operating and profiting in a small business is not as easy as some people think. And imagine all the revenue that's been lost that's now going to large corporations, all of the small businesses that had to shut down, but yet Target, Walmart, the big guys, they're still operating just fine. And it's an absolute travesty, that the biggest employer, which actually small businesses do create the most jobs here in the United States. Of course, Walmart is the United States' biggest employer as a company, but overall, most jobs are created by small businesses. All right, let's talk about inflation. We're seeing a combination of deflation and inflation. Of course, we all know what happened to oil prices, and tragically, it did not translate into as big of a discount in gas prices as some would have liked. But we're seeing inflation in groceries. We have the supply chain disruptions, and a lot of farmers sadly have to dump their food. It's not being shipped to restaurants as they had their supply chain set up, many farms set up to go directly to restaurants. What wasn't easy to transition into stores or even over to food banks. So you're still seeing massive food lines in many cities, and you're seeing shortages on the grocery shelves. And let's take a look at an article here. This is out of ABC13.com. Grocery prices hit 50-year high amid pandemic. And it's perishables, poultry, meat, fish up 4%, eggs up 16%, cereal and baked goods up almost 3%. And I've actually been noticing this for years, and if it's not higher prices, it's the packages are getting smaller. I was actually looking at almond milk the other day. It was $2.99 for a half gallon. I think that's a lot higher than what I remember paying for it a few years ago. That's $6 a gallon, $2.99 for a half gallon. This recovery is not going to be a V-shaped recovery. It's likely going to be a more L-shaped non-recovery. We're going to drop and maybe just somehow find a way to survive. But I don't see a lot of these jobs coming back, unless they take drastic measures, unless they delete everyone's debt, unless they start, pumping thousands of dollars to everyone every month. We talked about the $2,000 a month proposal being put out there by some of the members of the House and Congress. But if we don't start producing things in this country, we're going to continue to see shortages of items. Imagine if the farmers continue to go bankrupt, we're going to see even more food shortages. And it's not just food. What about healthy food? Have you tried to buy organic food lately? The prices are just outrageous. And now the cheapest food is usually not the healthiest. If you look at the packaged food and a lot of the fruits and veggies, they're all sprayed with chemicals and pesticides. But if you want healthy organic food, it's becoming harder and harder to get organic food at a good price. All right, let's go ahead and wrap it up here. Pension funds are in trouble, the biggest drop since the financial crisis. Let's take a look at a chart right here. And we haven't seen the big pain yet. To the far right here, we see the drop here in returns for pension funds. And this is the median return. And we see it's actually a bigger drop than right during the financial crisis in 2008. And this is only the first quarter. Just wait until the second quarter numbers come out. We're probably not going to see those until sometime in July. And yes, pension funds are reliant on the stock market to be able to operate, to be able to continue to pay out. And in many cases, these pensions overpromised, and they did not factor in a worst case scenario. They didn't factor in that something could go wrong in this economic system. It's kind of like somebody goes out and gets a 30-year loan based on their current income. Well, something's bound to go wrong in the next 30 years, and if home prices stop going up, that creates trouble for many people. And it's the same thing. A lot of these pension funds overpromise, and now they're under-delivering. And we even see states now asking for federal bailouts because they can't pay their unemployment claims, they can't pay their pensions. It's either that or they're going to have to raise taxes. But who can afford higher taxes? The middle class, the working class, they can't afford higher taxes. They took the biggest hit. About 40% of these low-income workers, how are they going to pay higher taxes? It's simply not possible. And what I would encourage is for everyone to prepare for the worst. I know you're probably hearing that this is going to be a V-shaped recovery. Don't believe in it. And if it is, great. I hope it is a V-shaped recovery. But I really encourage everybody to prepare for the worst. Try to be as much of a minimalist as possible, and just take a look at your everyday expenses or your monthly expenses. Can you live without cable TV? Can you live without taking 2 vacations a year? Can you live without a $4 or $5 coffee every day, sometimes twice a day? Can you live without going out to eat, fancy dinners, fancy steak dinners? Can you live without a brand new car? Maybe a car that's a few years old, maybe a car that you won't have a huge payment on. Maybe you'll have to do a little maintenance here to keep it going. But what can you live off of at a minimum? That's what we all should be doing, in my opinion, unless you're already a millionaire. But even then, you have to be careful. I've seen many stories where people won the lotto and they were multimillionaires for a while, and then all of a sudden they made a lot of foolish investments, a lot of foolish spending, and they ended up back to broke before they bought the lottery ticket. So I think we all have to be careful in this situation, no matter what your income is. Try to see where you can cut back. Like to hear from you down in comments. Are you doing anything to cut back, anything to prepare for this? Or is there no worries? It's going to be a V-shaped recovery, and you're booking your next vacation, your next flight, and you're going to go out and buy a new car when the economy opens back up. Let me know what you think. Thanks for watching this report. Thanks for your support. Bye, everybody. Hope you stay well. See you next time. Bye.